Can the IPO of PACS Group, a leading post-acute care provider, revitalize your portfolio? Or could it prove a bitter pill to swallow? Let's delve into this fascinating endeavor and gauge the potential rewards and risks. PACS Group kicked off its journey on the New York Stock Exchange on the 11th of April, 2024, with shares trading between $20 and $22. The company has kept a low profile since, with no significant acquisitions or partnerships announced. The financial health of a company often determines its investment potential. For PACS Group, the revenue story has been fairly positive. In the span of 2 years, from 2021 to 2023, the company's revenue tripled, growing from $1.17 billion to $3.11 billion. The primary source of this income, patient and resident service revenue, which has shown a steady rise. Other funding and revenues, though contributing to the total, have played a smaller role. Profitability, however, tells a different story. Operating income took a slight dip from $229.36 million in 2022 to $207.77 million in 2023. Net income saw a more substantial drop from $150.5 million to $112.88 million, largely due to escalating expenses. A deep dive into the expenses shows that the cost of services and rent make up a considerable chunk of operating costs. This mirrors the nature of PACS Group's industry, service intensive and dependent on physical infrastructure. General and administrative expenses have also been on an upward trajectory, perhaps suggesting a need for cost management. The company's cash flow is another area that warrants attention. Operating cash flow slumped from $92.62 million in 2022 to $63.7 million in 2023. This drop primarily stemmed from changes in operating assets and liabilities. Investing activities, dominated by acquisitions and property purchases, led to significant outflows. The company's liquidity seems to be holding steady, with an increase in cash and cash equivalents from $58.27 million in 2022 to $73.42 million in 2023. However, an increase in lines of credit from $146.82 million to $520 million might suggest a growing dependency on short-term borrowing. From an equity perspective, total stockholders' equity witnessed an increase from $68.65 million to $101.73 million, largely due to retained earnings. However, the company's reliance on debt, especially with increasing lines of credit, calls for careful scrutiny. In summary, PACS Group has exhibited consistent revenue growth and maintained a relatively stable liquidity position. However, the declining profitability and fluctuating cash flows underscore the need for improved cost management and operational efficiency. The investment potential of PACS Group lies in its experienced team, extensive network of post-acute care facilities, and focus on higher acuity patients. Opportunities for growth include the increasing demand for senior care services and potential for expansion into new markets and services. However, investors should be aware of the intense competition from established healthcare providers, reliance on government reimbursement rates, and the uncertain impact of healthcare reforms. As always, the decision to invest should be based on careful consideration and thorough research. Remember, this video serves to provide information, not financial advice. Be sure to do your own due diligence before investing. Is PACS Group the right prescription for your financial health? Only you can make that call. Thank you for joining us today in our comprehensive analysis of the PACS Group IPO. We hope that this video has given you a deeper understanding of the company's financial health and investment potential. Remember, the world of investments is vast and varied, and the key to success is continuous learning and staying informed. If you found this video helpful and want to stay updated with the latest IPOs, market analysis, and investment insights, consider subscribing to our channel. Just hit that subscribe button and turn on notifications so you never miss out on our latest videos. Your journey to financial literacy doesn't have to end here. Join our community of savvy investors and let's learn together. Thank you once again for tuning in. Until next time, keep investing wisely.